Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul? Doing all right, doing all right. Welcome everyone to At the Buzzer. How was your day, Coach Paul? What a rally.
How was your day?
Losing day. I probably should have missed the trying to short gold with silver rallying to all-time highs. Try to get short gold, just upper extreme of that range, which has been playing out. But with silver making all-time highs, I think it kind of pulled the gold market with it and stopped me out of those trades. But we still got an account to trade tomorrow, so that is what matters. Having a loss in there to protect the account, and we'll see what the Fed does tomorrow. We will see what the Fed does tomorrow. But losing day here. But chat, let us know. First of all, welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we could take advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay. I've been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experiences, some wisdom, and help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You're all our chat, our audience. Let us know how you did today. Are you up on the day, down in the day? Anything that you learned from today? I see Real Rowboat says, I couldn't find a position worth taking today. Sometimes that's trading, man. Sometimes you could convince yourself. You can convince yourself of anything, right? But if you can't find something worth putting your money behind, it's not such a bad thing, right? That might mean that the market is not presenting great opportunity for you, right? You could see somebody else make money, but if you don't see it for yourself, then that is okay. Let's talk about some of the news that we had today. We did have that JOLTS job openings number come out, 7.67 million. Forecast was 7.117 million, so a little bit better than expected. We had the WASD reports as well. Got some volatility in the grain markets. Overnight, we had the NVIDIA news, NVIDIA chips being allowed to sold in China. The president talked about a 25%, the US taking 25% of those sales of that H200 chip to China. And then we had JP Morgan selling off about 5%, lowering some of their forecasts. Anything else you got on the news, Coach Paul?
Nothing big. But JP Morgan news is kind of concerning to me. If Fortress Morgan is paring back, what else is there?
Right.
But the stock got hit pretty well. But other news, I think everything's taking a back seat till tomorrow's announcement. There is interesting tonight, some Japanese and Chinese PPI and CPI that could ignite some energy in tonight's trading, but still the big number or the big event is the Fed meeting tomorrow.
Right. Absolutely. We do have that Fed meeting tomorrow. The meeting started today, but the decision is tomorrow. The final decision of Powell's tenure as the Fed chair. I believe White House senior advisor Hassett is the next in line for that seat. Let's take a look at the markets then. There are 36 different markets we can trade with Topstep accounts today. To the downside, we had soybean meal. And I'm going to pull this chart up because it was down 1.6%. It was down actually pretty decent before that WASD report. I just want to, if anyone ever wants to trade ags, here is that WASD candle. That was about 0.6%. And this is a 5-minute chart. It was like that on a 10-second chart, I could probably assume. Down 1.6% on the day. Copper down 2.07% on the day. And natural gas, our biggest percentage mover to the downside. 2 days in a row now, natural gas, our biggest percentage mover to the downside, down 7.04%. To the upside. Yeah, go ahead, Paul.
It just can't. It's free fall.
Yeah. two really nice down days to start the week in natural gas. We'll take a look at that on a higher time frame when we
Yeah.
get to the energy charts, but it is in free fall since crossing that $5 level. Couldn't sustain buying up there and selling off. To the upside today, we have platinum up 2.89%, silver making new all-time highs, trading up 4.76% on the day, and micro Ethereum, our biggest percentage mover to the upside, up 6.06%. To talk about our big five, we had crude oil down 0.83%, the S&P down 0.15%, gold up 0.5%. We already mentioned natural gas down 6.98%, just around 7%, and the Nasdaq up 0.06% on the day. Pretty much unchanged there. Let's take a look then at the Nasdaq chart. On the daily, what are we seeing here?
Same thing as we saw yesterday.
Same thing as yesterday.
Finding balance. I will tell you this: if you put up a line chart, that could be a head and shoulders. Now, one thing that it has lost its momentum. We see the 20 under the 50, but you know, here we go. What is it? That's not Batman. Who's that today?
I don't know. It's like I don't know what happened to his eye.
One-eyed Jack.
I think he got punched in the eye. Yeah.
All right, but I mean, it has the makings of a head and shoulder. A little, not exactly even, but none of them really are. Could be an interesting day tomorrow. With that JP Morgan sell-off, that's pretty. I mean, that's not a volatile stock, and it's down 5%. To me, I'm a technician, but when I saw that today, I'm like, that's a red flag. But we'll see what the Fed does tomorrow. But they're starting to show a little bit signs of weakening here. It's definitely lost its momentum. I think.
Yes, we did. Maybe turning just a little bit here. We'll see it a little bit more on the 30-minute chart. But on the daily, I think kind of what we expected, right? We've been talking about consolidated ranges going into the Fed meeting. We will see what the Fed, let me take this drawing tool off. How do I stop that? All right, there we go. We will see what the Fed does tomorrow. Last time I checked, it was an 87% probability of a 25 basis point cut. Let's see if that's changed at all. I doubt it has, and I doubt we get anything outside of a 25 basis point cut. But right now, 87.4% probability of a 25 basis point cut. Let's see if Powell on his last hurrah as Fed chair does something surprising. All right, let's take a look at the 30-minute chart here on the Nasdaq. Pretty flat. We don't need to overanalyze range-bound markets, but we had a range-bound market. We looked below in the overnight session, pretty quiet. We have that 200 moving average on the 30-minute, which is a flat line. We closed below it yesterday. We talked about this during At the Buzzer yesterday, but this is a sign of weakness to the upside, right? This is the first time in a couple of days that we closed, first time in 13 days that we closed below that 200 moving average. So doesn't mean that the trend is broken and we're going to sell off. It doesn't, but it does mean that there's weakness in this market and we're continuing to see this. None of these bounces are really sustaining any move to the upside, but neither really are the moves to the downside, right? These are range-bound markets and waiting for more news. This is kind of when we say, hey, you know what? I think we can add this to the encyclopedia of days before a Fed meeting. This is normally what they look like.
True that. Now, also notice all the moving averages are braided.
Right.
They're all compressed. Why? Well, two things. Big meeting tomorrow, and it's December 9th. Santa Claus is coming in a few weeks here.
Yes, he
is.
The
end of the year. Like we talked earlier, this can continue for another week or two.
Yes, it can. All right. Let's take a look here. I mean, that's the 30-minute. We looked below yesterday's low. Not a whole lot to say about this. I'm going to just do a quick run through the S&P. Weaker. The Nasdaq did try to hold up a little bit better than everything else. We can see it kind of traded both sides of that 200 moving average. The S&P, we talked about this one during the opening call as well. If price advertises up here near this 200 moving average and volume doesn't, there's an opportunity for selling up near the 66, 68, 68, and that's kind of exactly what we did today. Take a quick look at the Dow. Similar story here. All these markets testing that 200 moving average on the 30-minute. Price traded above. What did volume do? It never went with it. And then the Dow gets that, that JP Morgan news that helps it sell off just a little bit. JP Morgan is also kind of heavily weighted in the S&P. It's the number 13 heaviest weighted company in the S&P. So it has a little bit of an effect there. And then the Russell, the strongest of the four.
Yeah.
Holding above
they
the
had
200
nice
moving
opening
average.
run.
Yes, it did. Opening range trade here in the Russell. Somebody started buying it before the open.
That happens in the Russell. We've seen that before.
Yes, we
You know
have.
what's interesting is the range in the S&P was 28.25 points. The average range is 90.
Yeah, that tells you how much opportunity was in that market today. And you could have traded like a range trader, but if you were looking for breakouts, that was just not the place to do it.
So
not the place to do it.
The NASDAQ range was 178.5 points, 468 average range.
Yep.
So happy holidays.
But happy holidays. Yeah, go ahead, Coach Paul.
It wasn't that way in the metals.
No, it was not. No, it was not. We will take a look at the metals in just a little bit here. Ready for Power Hour says, why do I feel like I'm the only one who sees value in the micro Ethereum trades? You might be. It's not one that gets talked about. Micro Bitcoin takes all the attention if we're talking about crypto. But if you're the only person that sees it, trade it. Trade it. These are huge percentage moves in micro Ethereum. They really are. And they're not going to cost you a whole lot either because this is 5 cents a tick. If you're trading it, trade it. And you don't even have to convince anybody else at this point. Go make your money and make your trades, manage your risk. There's no liquidity in micro Ethereum. Let's see. How much volume did micro Ethereum trade today? Micro Ethereum traded 176,000 contracts today. It's about a half of what the NASDAQ traded. It's more than gold traded today. It's more than silver traded today.
No, you have to trade bigger when you're trading that because what is it, a nickel uptick?
Correct.
But hey, there's volume there.
There is. There definitely is. Yeah, and the DOM is going to be pretty thin, but if you look at the micro Bitcoin DOM, it's the same thing. But again, these are micros. It's 5 cents a tick. That's probably one where you establish the risk, accept the risk, and just get in the market. I don't know that we need to be mincing ticks for 5 cents a tick in micro Ethereum. If you see a trade, I think just take it. And understand that it may be a thinner market.
Let's start trading that.
Yeah, I mean, it moves. It's consistent. It's like natural gas. It's consistently in a top percentage movers of the day.
So how much is that move from top to bottom?
It's a great question. Let me see if I can measure that for you. MET.
Or bottom to top, whoever your perspective is.
With a one lot, is that right? With a one lot, that is a $30 move.
And then that's the average range. You can do 5 lots.
Yeah, with a one lot, the entire day's range is $30. If you blow an account there, you're doing something insane. I'm just gonna say it. There are many markets that you can blow accounts in. There are markets that I've blown accounts in. If you blow an account trading micro Ethereum, you're doing something wrong.
Don't say
You're
that.
doing something.
Someone's going to try and do it.
No, please don't do that. Please don't do that. That is not financial advice.
Yes,
But
it's not.
you're doing something very wrong. With a 15 lot, that entire move is $450. Death by 10 million cuts, right? I mean, you might just have fallen asleep on the reverse button or something if that happens. All right.
I have a
Can I?
special set of skills. Challenge
Right.
accepted.
Can I get a
No,
free
no.
reset? No free resets. Nope. Do not. Nope. Not at all. That is not even a challenge. But again, it is a small market. If you have an XFA that's maybe on the ropes, and you're okay with accepting that there's going to be a couple of days where you're not making thousands of dollars, could be an interesting spot to look. Could be a very interesting spot to look for some opportunity. But you got to accept that, again, you may be making $20 on the day. All right. There was another question. So for our friend Risen here, can you go over your entry process for the J trade? Oftentimes, by the time VWAP leaves the opening range, prices already made its move. So that's two different trades you're talking about there. Two different trades: a J trade and a opening range breakout trade. Two different trades. Where did the opening range breakout trade play out well today in the Russell? Let's go to a 1 minute chart on the Russell here. And what you're saying here is a real thing, right? Sometimes by the time volume leaves the range, you're considering it too late. When you see volume leaving the range a little too late, maybe you don't want to get into this trade. But at this point, you have volume leaving the range to the upside. Is that leaving kind of late? At this point, it's, do you trust that there's a move to the upside, and can you get your entry somewhere close to volume? Coach Paul, you took this trade. Talk to us a little bit about how you executed this one.
Well, it's a 1 minute trade. What's my risk? If I like this is urgency. The risk to me is either two ATRs or that candle. It's not going to make new lows. So first of all, you predefine your risk. So what's my risk? Nope. Right away, I see that's a big candle, and there was big buying. I like that.
Yep.
Especially in the Russell. The Russell does not have much retail participation. It's a more commercial market. It's not sexy. It's the Impala. But it doesn't fool around either. They came in, bought it hard, and it had continuation, urgency. So if we measure out that candle, how much is it going to cost to go to? It should make new lows,
Right.
and how? What is? But I think with the Russell, the micro Russell, it's like $30.
Yeah, with a micro, this is probably about a $30 risk here.
Yeah. So they're small, do too. But the idea is this. Am I buying it with the larger hand, the strong hand? This is the strong hand.
Right.
Remember, I said this is a commercial entity. So defining that risk, I took it. I'll take that every time I see that. I bought a $100 risk. If I make 200, I got 2 to 1. I'm done for the day. It's that simple. It's like I think the more simple, the better. Um, Now, I think that ended up being a 4-to-1 trade. That thing just kept on going. We could look at that from a 3-minute. And we still had urgency.
Right.
I mean, it's that simple.
There you go.
Now, if we looked at that from ATRs, someone asked this question. Well, Coach, I might be the best person to explain the use of average true range. Can you please give a tip on the best time to go into the market and exit with a considerably lower time? Well, if you're looking for low ATR, that's going to be the overnight session. But let's take a look at that ATR. The opening, it starts to expand. Look at overnight. Now,
About half a point.
a half a point. It's by the way, I don't suggest trading the Russell overnight. You can go ahead, but I don't. But why is that ATR? Because there's no range. It's tight. But as soon as New York opens up, it's going to start expanding. All right. And that is the natural progression. The more volume that comes in is traditionally the more volatility. So if we let's look at NASDAQ.
Hold on a second. I just lost my charts. Let me bring those back up. Where did the charts go? All right. Take a look at the NASDAQ.
And look at last night, the ATR.
6 points on a 3-minute.
3-minute. It started. Now, when it started, it was probably like 12. What is that?
Yeah, right around 10.
And now we see that what's happening, those are small ranges. The average true range on this setting is going to look back the last 14 candles and sum them up, and you're going to give you an average. Key is it gets flatter overnight. Now, with a small ATR, there's smaller risk. It's also smaller reward. But I mean, if you're more comfortable with that, go ahead. But understand as soon as the New York session opens up, it's going to expand. And as you can see, we have a spike and then it lays off because what happened? Market slowed down. The volumes got smaller. So it is dynamic. Why is it more effective for risk management? Because it takes into consideration the last 14 bars versus, well, I only want to risk 10 or 20 points. Well, if that ATR gets over 40, and you're only wanting to risk 20, and you're getting stopped out a lot, well, that could very well be the reason. But it's used by professional traders. They watch it. It's a volatility tool. As we remember in March and April, what did it go to in a half hour? It was like
Yeah.
at one point like 100.
Yep.
So it's something to watch. Start watching. It's on the bottom. Set it to 14 bars. Watch it breathe. And then as you watch it, you're going to learn a lot.
Absolutely. All right. I see there's some other questions in the chat. For our friend Eloy here, I've been having trouble lately, very early stages of my trading. Is there an indicator that you wish you knew about earlier in your stages of trading that you can help me out with? If you're early on in your trading, there are going to be a bunch of different strategies that you trade right now. The fact that you're struggling and you're having trouble early is normal because you're trying to understand how this works. So more than saying, is there an indicator that I can use? I would make sure you're trading small size, trading micros, right? Not trading minis and not going in with the expectation of making money right now because you're still trying to figure out how this works consistently, right? So is there an indicator? I can't suggest one. I mean, we talk about the same indicators here every day. We talk about volume and VWAP, but that's just the way I trade. I can't suggest any indicator to you, and no one can, right? No one can suggest an indicator to you that is going to make you profitable over a consistent period of time. It could help you identify how to win a trade, but if you read the book, what's Mark Douglas's book, Trading in the Zone, everybody knows how to place a winning trade at this point, right? The consistency part comes from doing the same thing over a longer period of time with good expected results. So if you're struggling right now, Eloy, that's okay, right? I think a lot of people come into this and they think, hey, I want to make money right away. And yes, obviously you do. But, a first-year med student doesn't get to go do surgeries right away because there'll be dead patients on the operating table. Like, let's just call it what it is, right? So, go ahead, Coach.
I never thought of it that way, Coach.
I mean, that's the truth. But, slow yourself down, right? Try to identify what it is that you can repeat consistently, right? If you have a process right now that you are working through and you're struggling with that process, trade that process long enough to know when it doesn't work, right? Trade that process long enough to know when it doesn't work. For me, my gold trades today that I took to the short side, I know exactly why those trades didn't work. Now, I chose to ignore the signals that the market was giving me, even if I didn't use an indicator. The market did not tell me it was selling off, right? So I know why I lost. Can I avoid losing? No, right? You're not going to. So I think the one indicator that I would say to focus on the most is, and somebody said it in the chat, the best indicator is yourself, right? Understand how you respond to losses. Understand what conditions you need to have in order to execute a process day in and day out, because there is no 100% win rate strategy. Coach Paul, anything you would add to that?
An indicator is just that. There's no magic in it.
Right.
Even it's about developing an edge, and an edge it is shown over time. So as you build it, thinking of it, we talked earlier, is keep it simple. Is it an opening range breakout trade? Is it above a moving average? Something? Is it? Keep a simple. I wouldn't use too many, by the way.
No. Nope.
No more than 4. That would no more than 4.
Yeah.
But you're building. If you're new to this game, you're building something. You have to keep. First of all, you're going to have to keep a journal. Are you keeping data? Just because it didn't work 3 times in a row doesn't mean it's bad. That's well within the realm of possibility, because we're always dealing with uncertainty. That's what's really frustrating about trading.
Mm-hmm.
You never get full information. So when you're decision making, it's always under pressure because you're dealing with uncertainty. So no matter what, some people don't use indicators. I had on the Florida Board of Trade, I had my chart out, and this is before I'll date myself, before there was personal computers. We did it by hand. And a big trader, successful trader goes, "Hey, Paul, look at that, a chart." He goes, there's a chart on every ship at the bottom of the ocean. I'm like, oh boy. Okay. Uh, but what he didn't say was there's 2 million ships that made it to port using charts.
Right.
So, and I'm not putting it down or either way, but you have to develop something that you can execute over time that has an edge. And one of the problems we run into is changing.
Look
Oh, this one
in
didn't
search
work
of the
this
right
time. I got
answer.
to find something else, because there's no perfection. And that leads to, someone had a question here: what's more important, the risk reward or or the indicator? To me, it's the risk reward.
Right.
Part of the principles of successful traders, out of the book Trading in the Zone by Mark Douglas, one of them is predefining your risk. If you're not predefining your risk, let me ask the audience out there, what are you doing? You're gambling. You're literally going in. By the way, I'm not putting you down. I've done it.
Yep.
If I don't have an idea of where I'm getting out, uh, what happens? Well, first of all, there's a rare trade that just goes your way, right?
Right.
Oh, that was easy. So, what does it do to your mindset as it starts going against you? You didn't have a predefined exit.
Right.
That four-letter word comes up, hope, rhymes with dope. Then right there, you have the risk of a stream of bad decisions. Oh shit, I got to get out of it. I can't get out of this. That's a loss. I can't take the loss. You know what I'll do? I'll add to this loss. And then if it goes halfway back, I'll scratch, I'll get out.
Right.
So, going back to why we don't want to do that, predefine your risk, whatever it is. And you should have a budget. How much in that budget? How much, if I'm averaging on my 3 trades a day and my balance is $10,000 and I want to keep it reasonable because I have to manage the balance of my account. I don't want to give away, I don't want to lose more than 10. I'm going to make it simple, 10%. What's $1,000? So
Right.
each trade is budgeted at $330. All right. And that way, I think I'm going to throw this to you, Coach. How many times do we see traders just trade away the balance of their combine in one day?
Yeah, it happens too often. It happens too often, right? Where there is no risk management. And again, we could talk about trade setups and things like that, but if you're not managing an account, it really doesn't matter at the end of the day, right? It doesn't matter what strategy you use if you don't manage the account. So I think as far as strategy goes, find something that helps you make sense of the markets. But then, like Coach Paul just said, right, there are traders that have an account, and it doesn't even have to be a small balance, right? This happens with XFAs, right? We've seen traders with $10,000 balance XFAs lose the account in a day. $20,000 balance XFAs lose the account in a day. So, there is no right or wrong answer. That trader who builds that account balance to that point does have a system that they need to follow, or that they do follow that gets them to that point. But it's not a system that makes them a profitable trader over the long period of time if they don't manage their risk, right? So find something that you're comfortable when it's wrong, right? The strategy that I trade, do I like to lose trades? I don't. I don't like to lose, right? But I've accepted it that you do have to. So when you can accept that your losses come from you following a process, And that's the key, right? If the loss comes from following your process, if the loss doesn't come from following your process, how do I know this? What I'm about to say, because I've done it, it's much harder to accept. So define whatever your process is going to be. Your process could literally be, I'm going to flip a coin 5 times. If it's heads 3 times, I'm going to go long. If it's tails twice, or if it's tails 3 times, I'm going to go short. That could be your process. If you did that every single time and said, I'm going to accept whatever the results of this trade are, your results are going to be completely random just to start, right? But if your losses come from, hey, I'm doing that every single time, it's easier to accept. When somebody else says, hey, I think this market is a long, and you get in with them because you trust their opinion, and then it loses, it's much harder to accept that. It's also much harder to accept if I randomly click a button and say, I hope this goes up. And that's what leads to tilt and all these other things. So again, pick a strategy. If it's good 40% of the time, you might be in a good, if it's right 40% of the time, you might be in a good place if you can manage your risk. My trading strategy hasn't really been working the last 2 weeks, wondering if it's because of the December price action. Back test it and look, right? If you didn't take any trades, is your strategy working? Right? Look over the last 2 weeks. If I didn't place one trade, is the strategy actually working, or is my trading not working? Is there a difference there, Coach Paul?
Oh, yes, there is.
Is my trading not working, or is my strategy not working? If I execute my strategy exactly the way it's supposed to be done, is that not working, or is my execution of whatever I'm doing not working, and I'm saying that it's my strategy? Those are two completely different things. Let's take a look really quick. Great conversation here, though.
Yep.
Take a look here at gold. Pretty range bound still. Rejected that 4280 area. Rejected that 4282 area earlier this, or that was Friday. And just stuck in a range here. Just stuck in a range. Taking a look at the 30-minute. 200 moving average is a flat line. This is where I was trying to go short against that 200 moving average. And why didn't it work? There was no sellers. This is a flat market. I tried to get short somewhere around here, and the market held up pretty well. Anything you're seeing special here on the 30-minute?
Oh, no, I'm not. I see trouble for me.
Yeah.
I see trouble in that. Now, he had a J trade on the bottom.
Yes, it did. For our friend Risen, what's the entry here on this J trade? This is one where the volume leaves that range immediately. Well, not even, actually. Took a while. But the entry, if you think that's the reversal, the entry can't go before the close of that candle up there, right? So that's their entry. Risk goes on the other side. And looking for a 2-to-1 there. Right? But this is one that before volume left the range, do you take it? Do you wait till volume leaves the range? You could, but if you wait till volume leaves the range, you may be sacrificing trade location, and that is up to the trader's discretion. What we do here is like a coach teaching, you might teach somebody how to throw a pitch, right? Let's use baseball, for example. The grip on a 4-seam fastball is the same for everybody. But some people are going to throw overhand, some people are going to throw sidearm, some people are going to throw submarine style, right?
Submarine.
So the execution of your trade is really up to you. Where you want to take the trade, because I can't tell you, a perfect way to do it, because sometimes I'm going to execute it on this close. There are other times where I might say, hey, you know what? This is giving me a better chance to execute off of 50% of here, right? So you have to decide what. Again, I don't know that there's anybody who can give you an exact trading plan, right? Where this is the entry, this is the exit. What you have to do is say, hey, this is to a high probability what I've seen. How can I execute this trade where I feel comfortable with it, right? And I don't even care if you learn from Coach Paul and I. Whoever you learn from is not going to give you a strategy to win because they can't. Plain and simple. They can give you ways to look at the markets, but they cannot have you execute their strategy the same way they do. It's just not realistic, because everyone's going to do it a little bit differently.
It'd be great That's a great explanation. You know, at the end of you have to execute it.
Right.
And at the end of the day, we trade our personality. Now, with that said, can we adjust? Yes. That's where Tom Hugard comes in with best loser wins,
Right.
which means that you have to focus on controlling your losses. One thing you can control is your losses. You can't control your winners. If that was the case, we'd all be fat and happy.
Right.
It's not the case. So you can control, and that is hard to do because we're not built that way as humans. Like with this trade, if you are at one time, you're going to take some heat. And if you sit there and watch every tick and take it all personally, and you're cheering all the up, if you bought this, all the upticks, yes, yes, all the downticks, no, no, no. What's going to happen to your subconscious? The anxiety level is going to explode. And that is not good trading. And it
Yep.
takes time. So really, when we go back to it, that's why to me, it's so important to this. I'm willing to pay X to take that trade. And I'm willing to get to 2-1 or 3-1 if I take that trade. And then I am confident enough in it that I put it on and walk away. Pete Stoudemire used to tell me when he wanted to own soybeans and he was trading in soybeans, he put his position on to go trade corn. So he wouldn't be pulled out of it with too much action. If you have a trade on and you have this is your trade, this is the one you've been looking for, you should have enough confidence that you don't have to watch every tick. As a matter of fact, I would say this, the thing that hurts you most is watching every tick.
Yep. Agreed. Agreed. Chris has a question here, and a lot of the answers to these questions is going to depend on the person. What is the best time frame to watch your trade? For me, that's probably going to be the 30-minute. But I think the better answer is whatever time frame allows you to not micromanage your trades. And that might mean for some people not watching it at all. But for me, if I execute on a 3-minute chart, I do like to zoom out and then look at the 30 because then it just slows my decision making down, right? If 30 divided by 3 is 10, there's 10 more data points that I'm getting staring at a 3-minute chart. If I zoom out, I consolidate all those data points. So that's 10 less thoughts that I have to have, and probably way more than 10, right? Each one of those 3-minute candles gets its own subset of thoughts about what's happening. So if I zoom out, there you go. Let's take a look at the daily in silver. Made new all-time highs today. Traded up to 61,295. 61,295, new all-time high in silver futures contract. Pretty much a one-directional move to the upside here. We had that 200 moving average. And once volume started to trade above this was a trend to the upside. Now, the question is, how do you get into a trade like this? Do you believe that today is going to be the day that it makes the all-time high? We had a prior all-time high. I want to show you guys something that when we broke out of this all-time high, this is what killed my gold short. Look at the volume on the way up here. Volume increasing as price is going higher. Whether this is new longs coming into the silver market or some shorts or probably a combination of both, there's some real momentum behind this move here. And yeah, there was a lot of strength behind that move. Silver up 4.71% on the day. Go ahead, Coach Paul.
You just hit it on the head. Two things. VWAP never leaves that first half an hour. Mm-hmm. Then we can look at Shanghai Open. It's very much the same. Now, if you bought it early, you could have got stopped out.
Yep.
And that's okay. And this is why I come back. You can get stopped out, but if you're over leveraged, you're done. This is what I mean by controlling your losses. Now, what we want is to load the bases and hit a five run home run. It's not going to happen.
Right.
You could get lucky and load up and ignore the risk. I mean, but are you going to be able to do that over time? Can you rely on luck?
Right.
But once again, what did we have? We had a J trade. Now, it wasn't pure J trade there. It was heavy selling. Now, this is the setup, and this is stop hunting to me. That was the heaviest volume of the night at that time. We did follow through, but we followed through and we wicked. So there was not much there.
Nope.
But once we got over that high,
this is that highest volume at the low. And, you know, it's funny looking at this because depending on the time frame that you look at, it's going to be a green candle, but it is the highest volume at the low, looking at a 5 minute here.
All right. So it was that 3 minute looked to me like stop hunting.
Absolutely.
Like like some big entity said, well, let's set them up. And, you know, if you go fishing, you know this move. You got to catch a fish. You got to make some movements. You got to know the territory. But wow, there was.
Yeah.
Now, wow, what is that J trade? What is that, the 3 minute? Yeah.
What, this candle? Yeah, this is a 3 minute. This is a 3
Oh,
minute.
it never broke that.
No, it never broke it on the 3 minute. On the 30 it did, but on the 3 minute, no, it didn't. This was that flush below that 58 level on the 30 minute that we saw, right? That made the new low. It's the wick. That 3 minute candle is the wick on this 30 minute here.
All right.
But even then, right? This is, you know, is this a short? It's up to you to decide. Could be. How long do we have to wait before saying there's no reversal on the highest volume candle for taking a J trade? How long do we have to wait before saying there's no reversal?
To me, and then this is just from my observation, it's 5 candles and I'm done.
There you go.
And there was about 1, 2, 3, 4, 5 right there.
Yep.
But either way, this silver. Now we're looking at that daily, and we've seen this before. Silver, whatever entity, and this seems to me like central banks they're buying silver, not gold.
Yeah.
And we've talked about this before, and boy, that this had that flavor. Gold was kind of a random day. This was non-random buying when it got going.
So it was, especially once it made that all-time high, there was some real continuation flow from that point. Looking at a 3 minute again, we had that prior all-time high up here, and you know, sometimes people think, oh, you know what, you just short it once it breaks that all-time high. Let's attach a VWAP to the event, right? What is the event? A new all-time high in silver. There was urgency there, right? So even if you were quote unquote late to this move, after we break the all-time high, if we consider this the opening range, like and trade it like an opening range trade, above that $60, there was no no selling here. It was a constant bid all day and ended the day pretty much near its highs. So that is a significant move there. Does it continue? We will see. We will see. But There's some really strong buying here. Sandy
Yeah,
says
it's
seems like a
interesting.
decent support at 58. Yeah, that 58 level is where we saw that volume exhaustion there.
It was interesting. The copper did the opposite.
Yes, it did.
And we don't trade copper. I mean, this is the silver. The thing when we've been talking about. This is a silver centric metals market. I mean, the copper broke today.
Hmm.
So nice move by silver.
There you go. Let's take a look at the energies really quick. Crude oil and natural gas. Let's take a look at natural gas. Unless there's something you want to say about crude oil. Natural
No,
gas. Let's take a
natural
look.
gas.
All right. Natural gas here on the daily. We had the 20 cross the 200 moving average. And a really strong rejection up here. We talked about this candle being the second highest volume candle of the year in natural gas. It didn't make a high of the year, but again, second highest volume candle. And if I look at where the last one was, it's this one here, March 4th. We did eventually trade above that, but seeing some nice rejection up here. I know Coach Hoop was saying that, maybe the weather forecasts were expecting some more cold to come through, and it didn't happen. So we're seeing a sell-off here, but that is an aggressive sell-off over the past couple of days, down 12% on the week so far, with 2 down days, Monday, Tuesday. What are you seeing here, Coach Paul?
Well, one of the things, this is not, that's a J trade on the daily.
Mm-hmm.
That is buying exhaustion.
Yep.
Now, well, because we have that high volume into highs. By the way, those were the highs of the January contract. Now, this is a combined chart. If we had one that just had the Jan contract, this is the highest volume on a daily. So we had that potential. Now, Sunday night when we opened, we had a gap. And we could not recover. And natural gas has Sunday night gaps often, and they can tell a tale. So if we just go to the half hour, look at that gap. And we start from there. When we went through this analysis Monday, while we had that big downside, VWAP or volume stayed within that range, and we've been trending lower ever since. That yellow line, the 20 bar moving average, I mean, this is pure liquidation.
Yes, it is.
It's because it's not giving any time. It's like there's trapped buyers.
All above $5, right? This entire move was the initial retrace, and then just give it all back.
So that is on a day trade. That is a J trade. Kind of rhymed there too. But I mean, look at that. It never got over the VWAP from Sunday night opening today. And so let's look at today's action.
And here is last night's open. But we talked about this a couple of days ago, but the volume really starts to pick up around 12 a.m. Eastern time. So let's just go there, right? If there's here's a back to that question about how long, I think it was Ag Trader, how long do you wait for, how many candles do you give it for a J trade to play out? Similar here, where we look for this urgency trade, right as the day opens. If we're not getting urgency within 3 30-minute candles, I'd probably stop looking at it, because the market is flat and there's no volume here. But if we look then at midnight Eastern time and consider that the open, what do we get? Completely different story, right? And to me, this is why volume matters, right? Knowing when the volume comes in for a session, and it can change, but to a high probability, we see volume coming at the same times. That can help with timing. It could be the same exact trade, but this one, you wait 6 hours. If you're sitting there watching it, you may not be able to sleep or whatever it is because the market's not moving. It's not going anywhere. But if we look at when the volume starts to pick up, and again, it starts right around that midnight time, this is a clearly defined trade, and you have the confirmation that the market is starting to trade it as well, right? You know, I have a grocery store near me that is 24/7, which I love, right? Because I can go grocery shopping anytime. But then there's some other grocery stores that close at 10 o'clock. If I'm in the parking lot at 10:30 looking to do my grocery shopping for the week, I'm going to have to wait. Or I go to the 24/7 grocery store. Hopefully that makes sense.
Well, let's also look. It opens up at 8 o'clock. Now, I think. Let's see what happens at 8 o'clock Central. Let's see what happens at 7 o'clock Central when the volume starts to come in.
7 a.m.
7 a.m., 8 a.m. Eastern.
Here you go. A little more urgency there as well. Does come back and wick out the high up there. Maybe your stop is right above that high, and this could be a trade that you get stopped out of. But the flow all day was to the downside here. Right, maybe I get short here on this candle close, risking this high. And you get stopped out. But here's a case where you had the direction right, and sometimes the market just stops you out here. I'm looking at even a, you know, if you went with a 2 ATR stop, you probably still get stopped out here. And this is a case, I'm very happy we did this. 2 ATRs, right? I switched our stop placement to try to help this be a winning trade, and it doesn't. So I did everything right here, Coach Paul. I got short in a market that was selling off. It pushed lower. I waited for confirmation. I got my entry close to volume. I went with a reasonable stop, and I got stopped out. I did everything right. But I lost. And in this case, this is why we say you got to be very careful over leveraging trades. This is the right idea. You had the right idea if you got short here. And Courtney says good loss. Great loss if I take it with a one lot, if I take it with a couple micros. But if I take a trade and I think that this is high probability, so I'm going to take this with a 10 lot instead of a 10 lot mini instead of a micro that I should trade it with because I need this trade to work. I need to be able to take a payout by the end of the week. My account's gone on something that is high probability, but not 100%. Right? So we got to be careful of the temptation to over leverage. And I know it happens all the time. Right? It's just like, I know this is going to work. I'm going to put it on. And it did work for a little bit, but there's not one trading strategy out there that is 100%. Anything else you want to add to this, Coach Paul?
You covered it. It's a loss. Because I will add this. You think we're sitting there don't think we're sitting there cherry picking.
Right.
I would never do that to someone. It's unrealistic to think. It happened to me last night in the euro currency and the yen. I got stopped out in the yen. Thank God. I lost $75. It would have been a $500 loss. In the euro currency, I think it was $50. That ended up being would have been it's the cost of entry. I did not try and chase it and get that money back.
Yeah. Rizwan says it was not a right idea to go short under the swing low. Never buy high or sell low. You should have known that. Never buy high. Never buy high. Let's see. That was the high. Kept going. Here's another high. That kept going. If that's your strategy, yes, absolutely. Never buy high. But even if we go with never buy high or sell low, that's not 100%. So always manage risk. Always manage risk. Anything else you want to say, Coach Paul, before we go? We got a Fed meeting tomorrow.
My advice, especially if you're new, don't trade tomorrow. I mean, how many people do we see blow out on Fed days? We see it a lot.
Yep.
It's one day out of, well, how many days? If you're struggling, don't gamble and get. It can be and it usually is a very volatile day. Now, if you feel like gambling, go ahead, put it on, but don't complain. To me,
Yeah.
I think it's going to be limited opportunity for day trading. So you can just skip a day. That's fine. But if you do, I'm going to hand this off to you, Coach. What do you do?
What do you do?
If you decide to wait till after the announcement?
Wait till the dust settles. Wait till the dust settles, frame out the news candle, and see if it presents some opportunities from there. But yeah. Trade small, manage your risk tomorrow. If somebody can give me the last JD, if you're here. If JD's here. JD, you here? JD's not here. I was looking for the last year's last Fed rate decision. Basically what we do, frame out the news candle, see how the market responds to that candle, remembering that the real volatility comes during the press conference. The rate decision is kind of already assumed, but whatever Powell says going forward in that press conference is where we really see the volatility. So just be careful out there. If you do decide to trade, I'm probably going to be sitting on my hands, give myself some errands to run or something tomorrow. And then I'll be watching TopstepTV. We are going to have a strategy session with D, Coach Hoop, and JD, I believe. And then the FOMC watch party on TopstepTV, 1 p.m. Central Time. So make sure you are there for that. Last December, the market did sell off. You are 100% right about that. Taking a look, ZB Trader asked, can we look at the ZB charts? Here we go. Sitting right at the 200-day moving average. Perfect time for it. Fed rate decision tomorrow. Sitting right at that 200 moving average. So the market has a decision to make here.
Actually, the 10-year is just making new lows as we were broadcasting.
Yes, it is. Coming up on that 200 daily moving average as well. Going to be an interesting day tomorrow in all of these markets. Everybody, be safe out there. Trade well, manage your risk. How do you change your candle colors? Double click on them. You can change them from here. I think that's it, Coach Paul. I think we did it.
Yep. We're good.
We are good to go. We got Coach Hoop doing a class in Discord at 6 p.m. Eastern Time. Coach Roberts finishing up his class right now. Then we have Coach Ray and Coach Vince, 6 p.m. and 7 p.m. Central Time. Then Dakota, of course, with Slow Markets at 7:30. Barron's joining him. Tomorrow with the London Open, we have Aaron at 1:30 a.m. Central, D with the Euro Trade, 3:30 a.m. Central Time. And then we will be back for the opening call tomorrow, 7:15. Fed day tomorrow. Make sure you join us for the Fed watch party. If you haven't done so already, hit that thumbs up button on the way out. We appreciate you all being here, and we'll see you soon.
Bye.
Bye.